so many robo-advisors to choose from, which is the best one to go for? And given that ETFs exist, should we even use robo-advisors at all? These are some of the questions that I get regularly. That's why back in October 2022, I decided to invest my own money into all the top Singapore robo-advisors so that I can track the performance for myself and for you guys. The portfolios that I invested in were each of the robo-advisors' main portfolios that focus on long-term growth. So for SAIF, it will be the SAIF Equity 100. For Endowus, it will be Endowus flagship portfolio with 100% equities selected. For StashAway, it's their general investing portfolio at the 36% risk level. MoneyOwl's dimensional portfolio, DBS Digi Portfolio's global portfolio, OCBC Robo Invest aggressive portfolio, and UOB M Invest very aggressive portfolio. And due to popular demand, I've also started investing into AutoWealth's starter portfolio at the highest risk level earlier this year. Also, before I start, do join my Telegram group where you get to discuss or ask any questions that you may have. But without further ado, here are their performances from 20th October 2022 to 31st August 2023, which is about 10 months worth of data. Okay, we will ignore AutoWealth first as I've only started tracking it since 13 February 2023. For now, let's focus on the other robo-advisors first. Looking at the chart, there are two interesting observations here. First, both VWRA and SPY are the top performers during this period, and despite them being just passive ETFs, they've beaten almost every robo-advisors on this list, except for UOB M Invest, which beats SPY by a tiny 1%. Speaking of UOB M Invest, if you sign up to them and deposit any amount, you will get a $10 cash credit. But that's not the most exciting part. Instead, it is this. From now till 30th September 2023, if you are one of the first 50 users who sign up using my link down below, invest at least $1,000 into any of the specified portfolios and stay invested till 31st October 2023, you will receive an additional $40 cash credit. Then you'll be like, "Che, first 50 users only?" Don't worry, the last I checked, more than half of the slots are still available. So if you want an easy $50 cash credit to start your investing journey, do sign up using my link down below. With that being said, let's get back to the video. Second, you will see two main branches appear right at the beginning and continue all the way till the end, with the exception of SPY, the yellow line here, which suddenly shone from April to July, allowing it to jump from the bottom branch to the top branch. So at the top branch, we have VWRA, UOB M Invest, SPY, and DBS Digi Portfolio, all of which gave around 20% return. Whereas at the bottom branch, we have OCBC Robo Invest, SAIF, Endowus, MoneyOwl, and StashAway giving around 12 to 15% return. Now comes the question, why did some robo-advisors perform better than others? Is it because they are better than the other? Not really. Instead, the answer lies in the allocation. You see, the way each robo-advisor works is by holding a bunch of different ETFs and funds, each with their own purpose. For example, in OCBC Robo Invest Aggressive Portfolio, they have 22% VTI, which holds all of US stocks. Then they have another 21% in QQQ to give higher weightage to US tech stocks, 18% in Vanguard Developed Markets, and 6.7% in Asia, excluding Japan. And with that, they have about 69% in equities. Nice. Besides that, they also have about 15% of exposure in gold and another 15% in fixed income for diversification purpose. So that's OCBC Robo Invest. Then if you look at SAIF Equity 100, you will see that it's 100% focused on equity and it has a lot more ETFs, each focusing on different sectors and countries. So to make it easier to understand what's going on, I've compiled a rough estimate of what's going on in each portfolio. Let's go through it. First, we have the equity portion. There are four main regions here: US, Europe, and Asia Pacific, excluding Japan and Japan. Just in case you are curious why Japan is not included with Asia, that's because many investments treat Japan as a developed country, while the rest of Asia are considered as developing countries. Of course, there's a lot more regions not included here, such as Africa, Middle East, Latin America, and so on. But the main ones are still these 4. So how did these regions perform? Check this out. The Europe region performed really well right at the start, but basically stayed flat since April till now. Meanwhile, Japan was initially flat at the start, but in April, it suddenly jumped up and outperformed everyone. Same for SPY, which started doing well in April, though it only came in 3rd place. Then finally, Asia, excluding Japan, has stayed flat throughout the entire 10 months. So with these movements, we can roughly explain why these portfolios performed the way they did. For example, since SIFE is heavily focused on the US and the US didn't perform as well as the other regions, this causes it to give a lower return. Same for StashAway, which is heavily focused more on the US and Asia Pacific excluding Japan. Plus, it has gold, all of which didn't do too well. Therefore, StashAway gave a lower return. Then, if we check DBS DG portfolio's breakdown, we can see that the top performers are Europe, Japan, and US. So, while it has a high allocation to fixed income, it didn't stop DBS DG portfolio from giving a rather high return. Whereas for OCBC Robo-Invest, it's a lot more diversified, i.e., it has only 45% allocation in the US while having 15% in gold and 14% in bonds, both of which aren't doing too well during this period. That's why OCBC Robo-Invest only had a 15% return. With that comes the question, given that right now it seems like even a simple ETF like VWRA and SPY is beating almost every portfolio, is it even worth investing through robo-advisors? Short answer, I don't know. Long answer, if we are just looking at the short term, whoever is the winner is highly dependent on luck. For example, if we start from 13th February, the day when we started tracking Auto Wealth, SPY would be the best performer, followed by OCBC Robo-Invest and Auto Wealth. Meanwhile, both UOB Invest and DBS DG portfolio would be the weakest portfolios instead. I've seen people complaining that the robo-advisor is bad and they've been losing money ever since they started investing. Okay, it's not that the robo-advisors are bad, yeah, it's just because you have unfortunately started investing near the peak. While my portfolios may seem to only go up, it's because I've managed to time the very bottom of the market back in 2022. And that's important because if the markets were to go down instead, any portfolios that have holdings in gold and fixed income will outperform portfolios that focus more on equities. So for a more conclusive answer, this experiment needs to run for another 15 to 20 years before we can truly say who is the winner. Because unlike what many people think, robo-advisors are not some magical tool where it will give you CB good returns all the time, and there's actually very minimal active management involved. Check this out. While endowers say that they will do periodic rebalancing, the only activity that I've seen from them are them charging me a quarterly fee. But wait, this is not to say endowers is lazy or anything, yeah? The reason there's no rebalancing is because so far my portfolio allocation is pretty close to the target allocation. So there's no rebalancing needed. Most of the other robo-advisors have been doing some rebalancing here and there. For example, in September, SIFE sold away some of their China holdings and QQQ and redeployed the funds into US equities. Meanwhile, StashAway has been slowly selling off SLE, the Energy Select Sector ETF, because it has been doing rather well recently. Though StashAway hasn't bought anything with that money yet and is now sitting at almost 4% cash position. As for DBS DG portfolio, after it has sold off some US equities, it redeployed the money into China, Treasury bonds and corporate bonds. Okay, here are my thoughts. As of right now, while UOB Invest and DBS DG portfolio are the winners, it's still too early to tell which is the best robo-advisor or even whether robo-advisors can outperform ETFs or not. But one thing's for sure, robo-advisors will remain as a good alternative to someone who prefers not to do any research themselves and would rather leave the complicated investing process to the experts. Personally, I would certainly hope to continue this experiment for as long as I can, but do comment down below and let me know which do you think is the best robo-advisor. I would love to hear that. And also, do like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.